The partnership between the Polygon blockchain network and Mercy Core Ventures has the primary objectives of providing blockchain education and opportunities to underserved communities. Additionally, they intend to launch blockchain pilots to enable access to the financial system and create a blockchain bootcamp roadshow. Additionally, in light of recent disasters, donations in cryptocurrencies have been proven as a way to amplify the speed and reach of needed funds. This article highlights the recent partnership between the Polygon blockchain network and Mercy Core Ventures to bring blockchain education and opportunities to underserved communities. With their three primary objectives in mind, the partnership aims to fund blockchain pilots, create blockchain hackathons, and host blockchain boot camps to provide educational and informational sessions to those in need. The partnership also builds upon Mercy Core Ventures' Crypto for Good Fund 2, which seeks to use blockchain technology to drive global financial inclusion and climate resiliency. Additionally, the article demonstrates the power of cryptocurrency donations during times of crisis, where Mercy Core was the recipient of a 50-50 split of funds donated by the cryptocurrency exchange Binance and Ripple's XRP donation worth $1 million. This article emphasizes the potential of blockchain technology and cryptocurrency to provide aid and education to underserved communities. Major cryptocurrencies experienced a sharp decline on Friday. Bitcoin and Ether fell over 5%, and other top 10 coins saw similar drops. Coinbase experienced connectivity issues, while open interest in Bitcoin and Ether futures decreased 8.8% and 5% respectively. The market cap for Bitcoin declined by over $20 billion to $431.9 billion, and the overall crypto market cap is at $1.07 trillion. This article provides a comprehensive overview of the sudden plunge of major digital assets that occurred in Hong Kong on Friday. It is reported that Bitcoin and Ether both dropped more than 5%, while other major cryptocurrencies like Binance, Bitfinex, KuCoin, OKX, and Kraken followed suit. Coinbase also experienced connectivity issues during the sell-off. The article also provides additional details, such as the intraday lows of BTC and ETH, as well as the overall market cap of crypto. Finally, it provides data on open interest in Bitcoin and Ether futures. All in all, this article provides an informative overview of the sudden plunge of major digital assets in Hong Kong on Friday. Analysts say that investors' fears about Ethereum's Shanghai upgrade flooding the market with ETH are misplaced. The upgrade will deploy a two-tier withdrawal system that limits the amount of ETH withdrawn at a time. Research firms such as Bernstein and CryptoQuant also predict only modest selling pressure from staking withdrawals. This is due to the current low staking ratio and the emergence of liquid staking derivatives. Arcana's analysis suggests that the maximum daily amount of ETH potentially dumped on the market will decrease. This decrease is estimated to be below 1% of the daily trading volume in the next 6 months. This article provides a comprehensive overview of the upcoming Shanghai tech upgrade and its potential effects on the Ethereum market. Analysts believe that the volume of ETH outflows will be less significant than many observers are predicting due to the two-tier withdrawal system and the emergence of liquid staking derivatives. Additionally, investors may not opt for unlocking a large part of the 17.5 million ETH in staking contracts and dump it on the market due to the amount of ETH in the partial withdrawal bucket and the fact that many investors are diehard fans of Ethereum. Lastly, the staking ratio on the Ethereum blockchain is expected to increase after Shanghai as new stakers come online, outpacing withdrawers. Ethereum developers have pushed back the Shanghai hard fork, initially estimated for late March, to sometime within the first 2 weeks of April. This delay was announced at an Ethereum developer meeting on March 2nd. This will be the last dress rehearsal for the Shanghai hard fork before it is rolled out on the mainnet. The upgrade will allow the phased withdrawal of Ethereum staked on the Beacon chain and is considered bullish for liquid staking providers. There are currently 17.1 million ETH staked on the Beacon chain, valued at around $28 billion. This article accurately details the current timeline for the Ethereum Shanghai hard fork, and how it will affect staked ETH. It is clear that the fork has been delayed by approximately 2 weeks, and that the Goerli testnet launch will be the final dress rehearsal. The article also highlights the dynamic withdrawal process that validators must undergo to maintain network stability and security. Additionally, it explains how the hard fork could be a bullish event for liquid staking providers, as more users may opt for their services due to the flexibility and better yield opportunities they provide. Overall, this is a well-written and informative article on the Shanghai hard fork. Bitcoin experienced a sharp decline of more than 5%, dropping from $23,500 to $22,240 in an hour. Other non-Bitcoin cryptocurrencies such as Ether, XRP, Cardano and Matic also experienced declines. This came despite a positive start to the year, with Bitcoin still up 34.8% since January 1st. Technical analysts on Twitter claimed to have predicted the fall from the $23,000 resistance. Despite this, the decline is seen as a sign of increasing crypto friendliness in Hong Kong and China. An increase in stablecoin activity is seen as a sign of firms using crypto rails to move money around. This article provides an overview of the recent price movements of Bitcoin and other cryptocurrencies. On March 3, BTC experienced a 5% drop in just over an hour, while Ether, XRP, Cardano, and Matic experienced similar drops. Technical analysts on Twitter had predicted the fall from the $23,000 resistance. This sharp fall comes despite a solid start to 2023, with BTC still up 34.8% for the year. Ether has experienced a 4.74% drop in the same period, resulting in a $9 billion wipeout from its market cap. Despite this, the article notes that China and Hong Kong are becoming more crypto-friendly, as evidenced by an increase in stablecoin activity. A new survey co-hosted by Ripple and the Faster Payments Council Payment Organization reveals that 97% of respondents believe that cryptocurrency and blockchain tech will have a significant role in enabling faster payments in the next 3 years. The survey also found that 52% of respondents were considering crypto use for payments. However, only 17% of those supported crypto-enabled payments at the time of the survey. The biggest reasons for not adopting crypto technologies for payments were regulatory clarity and limited adoption. These results show the significant potential of crypto-related technologies to become a crucial part of the global financial system. This survey provides evidence that the global payments industry is bullish on the potential of cryptocurrency and blockchain technology to enable faster and cheaper transactions. 97% of surveyed FPC subscribers believe that cryptocurrency and blockchain technology will have a significant role in faster payments in the next 3 years. Additionally, over 50% of payment executives believe that most merchants will accept crypto payments within 1 to 3 years. The survey also points to regulatory ambiguity and limited industry acceptance as the primary deterrents to crypto payments adoption. The results of the survey are supported by evidence from other surveys, such as one conducted by PIMS and BitPay, which found that the majority of businesses with an annual income of $1 billion were adopting crypto payments. These results demonstrate that crypto-related technologies have the potential to become a key part of the global financial system. Cryptocurrencies experienced a drop late Thursday and early Friday. News regarding Silvergate Capital, a bank backing major crypto players, losing clients and being at risk of bankruptcy was the cause. This caused Bitcoin to fall 4% to $22,385. Ethereum also dropped 3%, wiping out $23.6 billion in market capitalization for the two largest digital assets. Silvergate's involvement with the high-profile bankruptcy of the exchange FTX led to clients panicking. This resulted in an $8.1 billion run during the last 3 months of 2022. Wont analyst Craig Erlam noted that this serves as a reminder. The collapse undermined confidence in the industry, causing ripple effects. If Bitcoin drops below $22,000, it could sink to a 6-week low of $21,400. This article provides a detailed overview of the recent cryptocurrency market crash triggered by Silvergate Capital, a bank backing major crypto players, losing major clients and teetering on the brink of bankruptcy. Bitcoin and Ethereum both saw a 4% and 3% slide respectively, wiping out $23.6 billion in market capitalization for the world's two largest digital assets. The article also provides an in-depth look into the timeline of the events leading up to the current crisis, the implications of the collapse of FTX, and the predicted effects on the market. It serves as an important reminder of the risks associated with the loosely regulated cryptocurrency industry. Bbaco, a Mexican crypto exchange and Ripple partner, has announced the launch of a debit card in partnership with Mastercard. This innovation will enable users to pay in Mexican pesos from their Bbaco wallet balance wherever Mastercard is accepted. It is only available to those in Mexico who have completed the KYC procedure. This launch is likely to be a win-win situation for XRP. It holds 54% of all trading volume on the exchange and is the largest XRP liquidity holder in Mexico. This debit card launch will increase the adoption of cryptocurrency services in Mexico. This article highlights the potential positive impacts of the launch of Bitso's debit card on Ripple, as it will increase the use of XRP-MXN trading pairs on the exchange. The launch of the card further enables the accessibility of cryptocurrency services to residents in Mexico, which is a major step forward in the adoption of digital currencies. Despite Silvergate's stock dropping more than 50% and raising questions about their future, the news had little effect on Bitcoin. It remained in the mid-$23,000 area. Market participants are eyeing the Federal Open Market Committee meeting later this month. With the potential for a 50 basis point rate hike, the outlook for Bitcoin could improve if it can break through the overhead supply around $25,000. This article provides an overview of the recent events in the cryptocurrency and traditional markets that have been affecting Bitcoin. Silvergate Capital recently announced in a filing that they may not be able to continue as a going concern, leading to market sell-offs and crypto firms withdrawing their business from the bank. Despite this news, Bitcoin remains relatively steady in the mid-$23,000 range. The Federal Open Market Committee meeting later this month could have an effect on markets, and if Bitcoin can break through the overhead supply around $25,000, its outlook will improve. Overall, the article paints a picture of a cryptocurrency market that is still volatile and uncertain, but could potentially see some good news in the near future.